Welcome back to AlgoBot, your home for clear, practical breakdowns of automated trading strategies for MetaTrader 5. I'm your host, and today we're examining an expert advisor called Imbalance Reclaim Momentum. This strategy blends a price structure idea known as the fair value gap with a relative strength index momentum filter. Over the next several minutes, you'll learn how it spots an imbalance in the market, how it waits patiently for a pullback and a confirmed reclaim, and how it manages risk with an ATR-based stop and a fixed reward-to-risk objective. This is educational content only, so let's dive in. So what exactly does Imbalance Reclaim Momentum do? At its heart, this expert advisor studies the relationship between 3 consecutive candles to find what traders call a fair value gap, or an imbalance. An imbalance appears when price moves so quickly in one direction that it leaves an untraded pocket on the chart, a small gap between the high of one candle and the low of another, created by a strong displacement candle in the middle. The strategy treats that gap as an area of interest. Rather than jumping in the moment price first reaches the gap, the EA is deliberately patient. It arms the gap, then waits for price to pull back into that pocket, and finally waits for a confirmed reclaim, a candle that closes back out of the gap in the original direction. Only then does it consider an entry, and only if the relative strength index agrees that momentum is leaning the same way. This approach runs on a single time frame, using whatever chart period you attach it to. It trades one symbol at a time and holds only one position per symbol, tagged with a magic number so it never interferes with your other trades. Risk is defined structurally. The stop sits beyond the far edge of the gap with an ATR buffer, and the take profit is placed at a fixed multiple of that risk. Who might find this style interesting from an educational standpoint? It tends to appeal to traders who like the logic of order flow and smart money concepts combined with a classic momentum check. It is a rules-based, mechanical approach with no discretionary guesswork. Remember, trading always involves risk. Losses are a normal part of the process, and nothing here is a recommendation. It is simply information to help you understand how the code behaves. Let's walk through the exact logic, step by step. Everything happens on the close of each bar, so the EA only acts on completed candles, never on the noise of a half-formed one. First, detection. On every closed bar, the strategy looks at the 3 most recent candles. For a bullish imbalance, it checks that the middle candle is a strong bullish displacement. Its range must be larger than the average true range multiplied by the displacement multiplier, which defaults to 1. It then confirms that the high of the oldest candle sits below the low of the newest candle. That untraded space between them becomes the gap. The mirror image, with a strong bearish middle candle and the newest high below the oldest low, defines a bearish gap. Once a gap is found, the EA arms it. It records the top and bottom edges of the zone and starts a patience counter. Now it watches. For a bullish gap, it waits until price pulls back so that a candle's low dips into the zone. That is the tap. After the tap, it waits for a candle to close back above the top of the gap, and that candle must itself be bullish, closing above its open. That is the reclaim. When the reclaim appears, one final check stands in the way. The relative strength index must be at or above the momentum threshold, which defaults to 52. If momentum agrees, the strategy signals a long entry. For shorts, everything flips. Price taps up into a bearish gap, a bearish candle closes back below the bottom, and the RSI must be at or below 100 minus the threshold, which is 48 by default. Risk management is built in. On a long, the stop loss is placed below the gap's lower edge, offset by the ATR times the stop ATR multiplier. The distance from entry to that stop becomes 1 unit of risk, and the take profit is set at the reward-risk ratio times that distance, 2 by default. There are also 2 safety valves. If price closes completely through the gap before reclaiming, the setup is abandoned, and if the gap grows older than the expiry bar count, 12 by default, it expires untouched. This patience is the whole point. The strategy is built to filter out clean fill-throughs and only act when price respects the imbalance. Let's look at the actual MQL5 the expert advisor runs, the way you would see it in Meta Editor. At the top are the input parameters. RSI period and ATR period set the lookback for the 2 indicators. Displacement multiple decides how strong the middle candle must be to count as a real imbalance. Momentum threshold defaulting to 52, is the RSI gate. Stop ATR multiple sets the size of the buffer beyond the gap. Reward-risk ratio fixes the profit objective relative to risk, and FEG expiry bars controls how long an armed gap stays valid. Lot sets the position size. Now the buy block. The line checking whether the candle's low is at or below the gap top marks the tap. The reclaim condition then requires three things together. The gap was tapped, the close is back above the gap top, and the candle closed above its open. If that is true, and the RSI is at or above the momentum threshold, and no position is already open, the EA calls trade.buy. Notice the stop loss is the gap bottom minus the ATR buffer, and the take profit is the entry plus the risk distance times the reward-risk ratio. The sell block is the exact mirror. The tap is recorded when the candle's high reaches up into the gap. The reclaim needs the close back below the gap bottom on a bearish candle, with the RSI at or below 100 minus the threshold. When that lines up, the EA calls trade.sell, placing the stop loss above the gap top and the take profit the same risk multiple below the entry. Both sides share identical structure. Only the direction changes, which makes the behavior easy to study and to test. Now let's bring it to life on the chart. On screen, you can see a sequence of candles, with the relative strength index plotted in the panel below, along with two momentum levels, the long level at 52 and the short level at 48. Watch the left side first. The first candle is quiet and ordinary. Then comes a tall, strongly bullish second candle. This is the displacement candle, the engine that creates the imbalance. Its body is much larger than the recent average range. The third candle opens higher and, crucially, its low stays above the high of that first quiet candle. That untraded pocket between them is the bullish fair value gap, shaded in green on the chart. At this point, the EA simply arms the zone and waits. Over the next couple of candles, price drifts back down, and you can see one candle's low dip right into the shaded gap. That is the tap the strategy was waiting for. Notice the RSI cooling off toward its midline as price pulls back. Then the reclaim candle forms, a bullish candle that closes firmly back above the top of the gap. At that same moment, the RSI is sitting above the 52 level, confirming momentum is leaning up. With the tap, the reclaim, and the momentum check all aligned, the buy entry marker appears. The stop loss is tucked just below the lower edge of the gap, beyond an ATR buffer, and the take profit objective is set at twice that risk distance, because the reward-to-risk ratio defaults to 2. Follow price from the buy entry marker. The next candles push higher, the RSI climbs into the 70s, and price travels steadily upward until it reaches the take profit target. The long idea has played out exactly as the rules intended, a patient entry on the reclaim, then a run to a predefined objective. Now the second half of the chart shows the mirror image. After the high, momentum shifts. A strongly bearish displacement candle drops sharply, and the candle after it leaves its high below the low of the candle before the drop. That forms a bearish fair value gap, shaded in red above the current price. The EA arms this new zone and waits again. Price then rallies back up, and you can see a candle poke up into the shaded bearish gap. That is the tap on the short side. Watch the RSI here. It is rolling over, sliding back down toward the 48 level. The reclaim candle is a bearish one that closes back below the bottom edge of the gap, and at that instant the RSI is at or below 48, satisfying the short momentum condition. The sell entry marker now appears. This time the stop loss sits just above the top of the gap, again beyond an ATR buffer, and the take profit is placed the same 2-to-1 distance below the entry. From the sell entry marker, price slides lower candle by candle. The RSI presses down toward 30, and the move reaches its take profit target near a fresh low. Both trades follow the identical blueprint. Find the imbalance, wait for the tap, demand a confirmed reclaim, check momentum, then manage the position with a structural stop and a fixed objective. Seeing the long and the short side by side shows how symmetrical and rule-bound this strategy really is. And of course, on a live chart, not every setup will reach its target. Some will reach the stop instead, which is a normal and expected part of any trading approach. That brings us to the end of our breakdown of the Imbalance Reclaim Momentum Expert Advisor. We covered how it detects a 3-candle fair value gap, how it patiently waits for a pullback and a confirmed reclaim, how the relative strength index acts as a momentum filter, and how it defines risk with an ATR-based stop and a fixed reward-to-risk objective. Everything you have seen here is for educational purposes only, and nothing in this video is financial advice or a recommendation to trade. If you found this analysis helpful, please give it a like, leave a comment with the strategy you would like us to examine next, and subscribe for more MetaTrader 5 strategy breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.